From New York to London and Tokyo, tech stocks recently took a bad beating on Monday, with the sell-off wiping out over $1 trillion in market value. The rout was driven by Deepseek, a Chinese startup whose AI platform appears to look as good as anything on the market at a fraction of the price and a sliver of the energy consumption. Now, for over 2 years, US stock investors have been showered with non-stop gifts from artificial intelligence. Since the beginning of 2023, the Nasdaq 100 index surged by 92%, adding over $14 trillion and minting billions for a small group of tech innovators and executives. However, Wall Street had a shock to the system on concerns that a cheap AI model from Chinese startup Deepseek could make valuations that have powered the bull market tough to justify. The world's richest people lost around $108 billion due to this tech-led sell-off. Now, what's remarkable about Deepseek is that the AI firm created tools that go toe-to-toe for a tiny fraction of the multi-hundred billion dollar budgets of major tech companies. Deepseek's AI assistant overtook OpenAI's ChatGPT on Apple's US App Store, and China has shown that scarcity can fuel innovation. Nasdaq's 3% drop on Monday was the worst in 6 weeks, bringing its market value down by about $1 trillion from Friday. In the largest market wipeout in history, Nvidia sank 17% and lost about $600 billion in value. Its worst day since the pandemic hit in March 2020. Constellation Energy's 21% loss led the way for energy companies that had hoped to profit from the surge. The fallout from this AI disruption spread rapidly across global markets. In Asia, SoftBank Group ended the day down 8.3%, while semiconductor stocks in the US faced heavy losses. Broadcom dropped 15%. Philadelphia Semiconductor Index plunged 7.9%, in its biggest decline since March 2020. In Europe, ASML fell 7.6%, contributing to a broader sell-off.